Mishcon Academy digital sessions.
Good afternoon. Welcome and thank you for joining us today for this Mishcon Academy digital session focusing on business interruption insurance. I'm Miles Geffin. I'm a legal director at Mishcon and I'll be moderating today's session. I'm delighted to be joined by our panelists, Sonia Campbell, Richard Leedham, and Philip Eady QC. Sonia is a partner in Mishcon's dispute resolution department. Richard is also a partner in Mishcon's dispute resolution department. Philip is a specialist lead advocate at 20 Essex Chambers. So Sonia, starting with you, what is BII and what risks does it usually cover?
Business interruption insurance is a form of insurance which is generally intended to protect against financial loss. In usual circumstances, it is triggered by physical property damage is where you would usually see it. So you'd have material damage to property, which then triggers financial loss cover in the form of business interruption insurance.
In terms of the ordinary course of events, who would you have seen claiming on those types of policies, and in what circumstances?
It can be any kind of business. So you could have manufacturers who have property damage to equipment that they use in the course of the manufacture, and because something has happened to that property and they can't operate their business in the usual way, that gives rise to financial losses that can be claimed under the business interruption. So that's how they usually link. What we're going to talk about is slightly different.
Philip, does a novel coronavirus sit easily with the type of risks that Sonia's just described and that BII was designed to cover?
The answer in simple terms and in general terms is not very comfortably, because it's a novel virus. No policy, I think, is going to cover it in terms by definition because no one had seen it before.
Richard, I know that you're getting a significant number of inquiries regarding BII. What barriers are you seeing to policyholders notifying their insurers of claims?
There's a general point that the response from nearly all insurers we've seen on BI is pretty much a blanket denial of claims. That feeds into, as I've said, an almost universal rejection of the claim early on. We've had examples of clients having had an initial letter rejecting the claim from an insurer get sent then to the claims complaints department of the insurance company when it's very far from a complaint about how the insurer has behaved, which is what that procedure is for. It's a denial of the claim. And we've also had, I would say, I hope not too controversially, a pretty mixed response from brokers who are right at the centre of the insured-insurer arrangement and legally owe the strictest of duties really to the insureds as their principals and they're an agent of them. And we've had some pretty extreme examples of brokers positively advising clients not to notify claims. I think the other thing that is a real issue is where there is cover under BI policies. It is very often what's termed sublimited, so the limit of cover will be a lot less than the overall limit of cover for all business interruption under the full property damage section of the policy. So the amounts of money in play for businesses are not massive, and they're then faced with that dilemma of needing to spend money on lawyers against a relatively small return at some point in the future with an insurer who's put up all the shutters.
In relation to that latter point, what are you looking at in terms of overcoming that, what appears to be a commercial barrier?
We have been appointed by the Hiscox Action Group, and there's real interest in the case being run on a group basis. There seems to me to be no doubt that if it works under the particular wording to group claims together against one particular insurer, then that is definitely a route that policyholders should consider, because by grouping together they defray the costs. Litigation funders we know are interested in that type of action, and that takes the cost issue away from the insured and gives them the maximum clout, I think, of taking on what are some very large companies.
Philip, in light of what Richard's just said, are you able to sort of predict what the main preliminary disputes are likely to be, around which one can imagine are going to be around policy wording definitions, before you get into individual claims?
The first question is going to be, is there property damage, so that you're within the main business interruption insurance cover? Generally, those wordings require loss of property or destruction of property or damage to property. And often they actually say that the damage must be physical damage. There are plainly going to be arguments. You can see that an insured might say, well, I had a number of people in my office who actually had coronavirus, and that could constitute physical damage. The insurer is likely to say, well, even having got that far, that's not what has caused your business interruption losses over months. Once you move on from the main section, you're going to be looking at the extensions, which cover things that aren't necessarily dependent upon physical damage. And there are three main types of clause that people are looking at are disease clauses or disease cover, denial of access or prevention of access cover, and closure by government or local authority. If you've got a list of diseases, and a lot of these policies have cover for closure because of disease, but it's specified diseases, and it will never say coronavirus. The insurers have generally put in the front end of most policies wide exclusions relating to the sorts of things that they think are potentially going to hit the entire market. And they include nuclear, they include terrorist, and events like that. What I think insurers are going to be saying is, what they haven't done is exclude on a wide basis pandemics. That then brings us to the other two sections of the policy, or some policies which might be available. There's the prevention of access clause, which sometimes exists. Some of those require prevention of access because of a physical damage. And there may even be questions about whether access to the property has actually been prevented. The fact that your customers have been told they can't come doesn't necessarily mean that access to the property has been prevented, or that's the argument insurers may run. And then the third area, which I mentioned, is closure by government or by local authority. Again, that may well require that closure to be for a specified reason in the policy, and sometimes the specified event to which the closure needs to be related needs to be something on site.
Richard, once cover has been established, briefly, what are policyholders then, what are they then going to have to do in terms of quantifying and proving their loss?
What would typically happen in that scenario would be a loss adjuster would be appointed by the insurer to go through the losses. That's what they do. What the advice would be, once you've made your notification, got a declinature from the insurer, and then the policyholder can decide, what it wants to do in terms of taking action. But every business needs to just take stock of what it's lost. We should say that there is a duty to minimize, or not minimize, to mitigate your loss. Are you able to redeploy people? Have you got people working from home? It's all just good common sense financial housekeeping about the state of your business.
Richard briefly touched on the question of mitigating losses. Can you see issues arising in relation to that?
I think the starting point is that a lot of these policies contain a number of conditions precedent. They include prompt notification, but they may also, and slightly controversially, include, as a condition precedent, a duty to minimize your losses. And there are two ways, obviously, of trying to do that. One is to make sure that as far as possible you supplement the revenue in alternative ways. You've got to try and do your best to keep your business running as well as you can, even without the property. And then the alternative is you need to save costs where you can save costs, because generally speaking, your business interruption losses will be your lost revenue compared to a previous period minus costs saved. And I think it's at the cost saved point where the government's furlough scheme could make some quite difficult decisions. Is it your duty as an insured to save the insurer the cost by furloughing your employees and reclaiming that money? If you were, for example, an employer who took the view that the government shouldn't have to step in, is it really right that you must furlough the employee, recoup the 80%, and the insurer gets the benefit of that because that's a cost saved by you, as opposed to you continuing to pay the employee and get that money from the insurer?
We've got a very interesting question here, and this leads into another issue. The question is whether landlords should be looking to claim on their loss of rent policies as opposed to business interruption policies.
So for a landlord policy, and certainly the policies that I've been looking at, there is cover and under sometimes a second section of the policy or a third section, but a separate section of the policy that will normally be called something like loss of revenue or loss of rent. And that section will say what cover is provided under that section. So you have the active competent authority extensions, you have denial of access or prevention of access extensions, you have loss of attraction extensions, you have disease extensions. And so you have to have a look at whether your loss arises because one of those insured perils or insuring clauses has been triggered.
At this stage, are we expecting any formal legislative intervention from government in this area, such as deeming provisions, or in conjunction with the furlough scheme?
There's no sign from central government that they're going to interpose into policies, but the FCA, who are the regulator, the overall regulator of the insurance industry, the chief exec, Chris Woolard, wrote a letter last week to the chief execs of all insurance companies. There's some comfort for policyholders there in that he made it clear that where there is cover, they should respond and treat customers as fairly as is their duty, frankly, anyway. But made the bigger point, really, that in a lot of instances, in the view of the FCA, that there isn't cover.
The Corona Jobs Retention Scheme is still, in its early days. For my part, I think that if the government gets wind at some point amongst all the other things it's doing, that insurers think that the scheme is there to lessen their losses, I think the government might intervene on that.
Before we wrap up, I think it'd be helpful if I could turn to each of you in turn, what you would say would be the key takeaways from today's session.
I would say there are a couple of things, actually. First of all, if you think you have potential cover, then you really should be checking the notification provisions, because quite often you have to notify promptly, and that could be a condition precedent to liability. So even if you otherwise have valid cover under your policy, but you don't comply with the notification provisions, then an insurer could be entitled to say, sorry, you have no cover for this claim. I also think that the wording of these clauses is really important. So I think if there's any doubt, get the policies checked and just, don't take at face value that there isn't cover if you think there might be, because these are obviously valuable recoveries if you can make them.
From a more commercial perspective, if you're out there as a business, and you've had your claim rejected, don't despair. You are not alone. Do get online, do see what else is happening. Various groups that are forming, not just ones we're involved in. There are all sorts of groups out there. Get involved and see if other people are raising the same issues. And finally, Philip.
Getting your broker on side. They should be looking at this. They shouldn't be just coming back and accepting the insurers. There is no cover. Good brokers, I know, are doing that. Some are really going out of their way to do it. Others, at least instinctively, just say it's all too difficult.
Thank you to all of our panellists today. Please do visit mishcon.com, where you'll find a wealth of material, both in relation to insurance issues, but also the other issues. And thank you all once again. And we look forward to seeing you at future digital sessions.
The Mishcon Academy Digital Sessions. To access advice for businesses that is regularly updated, please visit mishcon.com.